Hey everyone, like I mentioned before I went on vacation, one of the first videos I was going to do when I got back was an update to my list of top stocks to buy. That's what I'll do here. This is a list of top 24 stocks to buy that I've been doing since the start of the year and updating monthly. As you may have noticed in the title of the video, there's 25 stocks to buy, so I've added one in this month's allocation here. So you're going to want to tune in to see what that new stock is in my list. I'll also update the performance of my list of 24 stocks to buy that I've been maintaining throughout the year. And then I'll share with you what the new stock is and why I'm adding it to the list. But before I get started, let me say thank you for all the well wishes I got during vacation. I took a brief 1 week break, and all the comments I got on my video highlighting that I was taking a break was truly reassuring and let me know how much you all appreciate the videos and the content that I'm producing. So thank you for all those well wishes. And without further ado, let's take a look at what these top stocks to buy are right now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the first batch of 12 stocks to buy in March 2024, updating to April of 2024, are the Walt Disney Company, which has returned so far 35% year to date, Alphabet returning 7.98% year to date, Nvidia, of course. Who can forget about the performance of Nvidia? It's already up 82% year to date in 2024, but I'm keeping it on my list. And in the next slide, I'll share with you why, despite being up 82%, the stock is still a great value here today. Visa, of course, has been one of my favorite stocks for several years now, remains on the list, returning so far 7.39%. Followed by PayPal, Fortinet, which concerned me a little bit and is still a concern, but it's up 16.68% year to date. The reason I'm a little concerned about Fortinet is because of a strategic move that Palo Alto Networks is implementing that I'm concerned how it's going to impact the cybersecurity industry. Fiverr International is down 22% year to date. One of the more disappointing performers in my list of top stocks to buy, followed by Netflix, which is up 24.75%. I still like Netflix despite this increase. The streaming industry is one of my favorite industries right now to invest in. The competitive pressure in this industry is easing significantly as nearly all of the participants are raising prices, decreasing spending on content, and cracking down on password sharing, all of which is impacting profitability industry-wide. Alibaba down 6.64% year to date, trading at a really cheap valuation due to geopolitical risks and slowing growth concerns for Alibaba Group. I still like this stock right now. Uber up 25.04% year to date in 2024. One of the best management teams in all of the companies that I follow. I think Dara Kashkari has done a great job at Uber since coming in, turning that company around from a money losing, nearly losing so much money, and now turning it around, generating free cash flow. I really like that story there. Amazon up 18.56% year to date. I like what Amazon has done in growing into those investments the company made in the early stages of the pandemic, and its advertising revenue is really growing nicely, a lucrative profitability for the company in that segment. And Target up 25.35% year to date in 2024, a huge return for a company like Target that doesn't experience big stock price swings like this before. But I mentioned at the beginning of the year, I really like what Target has done with its same day fulfillment options and turning its brick and mortar locations from a disadvantage to an advantage, rivaling Amazon in its ability to fulfill orders faster than Amazon. You can order something online at Target and then go to the store and pick it up within 2 hours. And you could drive up to the parking lot and they'll bring it to you in your car. That has proven to be very popular with customers as Target keeps mentioning growth in that segment, even after the surging revenue it experienced in that segment in the early stages of the pandemic, as people were looking to avoid going shopping inside the physical stores. Here's why I think these stocks are still a great buy despite their increased prices so far year to date. And I'll start with Nvidia because that's the one a lot of investors are worried about, being that it's up so much already. Investors are concerned maybe it's too expensive because it's increased in price so much. And if you look at the forward price to earnings ratio, it's still trading at a forward PE of 29.99, which is a relatively cheap valuation considering its very lucrative prospects in artificial intelligence over the next several years and several decades, in fact. So Nvidia is trading at a cheaper valuation than, Amazon here in this list, trading at a cheaper valuation than Fortinet. And so you look at Nvidia's valuation and not just the price, and you come to the conclusion that it's still a good value despite the significant price increase. And that's true for many of the stocks I've included in this list here, the most expensive one being Fortinet at a forward PE of 35. And I already mentioned Fortinet is a stock of concern. If you were ranking my list here that I have, Fortinet would be towards the bottom of my list of top stocks to buy. So I guess you can say it's one of the worst of the best here in my list of top stocks to buy. Still, I think at current valuations, it's still a top stock to buy. It's just one that I've highlighted. I've put a star under. I'm keeping a close eye on given the industry factor at play there with Palo Alto Networks. All right, the next group of stocks to buy here is Starbucks, eBay, Zoom Video Communications, Chewy, one of the worst performers here at negative 32.67%. Still, I like Chewy, and I'm going to mention a little bit more about why I like Chewy stock here. Nike down 13.13%. Meta Platforms, AMD, which is the rival to Nvidia, although it has yet to come close to Nvidia in the AI race. Snap, another poor performer on my list here, down 32% year to date, followed by Coca-Cola, the Home Depot, Six Flags Entertainment Corporation, benefiting from that away from home trend. People are eager to get out of the house and spend money away from home on things like theme parks and restaurants and those factors, which I've included a lot in my list here. There's several stocks that are benefiting from that away from home trend, including Six Flags, Coca-Cola, Starbucks, and Disney, as consumers continue to favor away from home spending. And then finally, Salesforce, the customer relationship management company, is up 14.61% year to date. Now, in this batch of stocks, the most expensive one is Salesforce and AMD, trading at a forward price to earnings of 27 and 32.93 respectively, followed by Snap trading at a forward PE of 30.63. Really, that's the most expensive stock there, AMD, at a forward PE of 32.93. But given its excellent prospects in artificial intelligence, I've mentioned several times in my videos on AMD that their competitive chip that they're introducing is going to get a chance to take market share because companies do not want Nvidia to have such a large market share. It gives Nvidia too much power. It gives them too much pricing power and too much negotiating power when they go to purchase those chips, right? Companies want to have some diversification in their supply chain. They don't want to just rely on Nvidia. So AMD is going to get a shot here, and they're going to get a piece of that market. Even if their chip is competitively worse than Nvidia's, they're still going to get a shot because of those risks, because of that supplier risk. No company wants to be exposed to just one supplier. It's too risky for a company to rely on Nvidia exclusively. So they're going to want to diversify. They're going to want to give AMD a chance. And so that's going to give AMD a certain piece of the market, to be sure. Okay, so now, before I mention the new stock on my list, I want to look at the performance so far of my list of top 24 stocks to buy, how they've performed year to date, and how they compare to the S&P 500. And so you want to see what would you have performed better with, buying my list of top stocks to buy or investing in an index fund tracking the S&P 500. So to do that, I need the S&P 500 performance. And so far year to date, if you just look at the S&P 500, it's up 10.39% year to date. It's having a phenomenal year so far, being up 10.39% in just 3 months. That's a really strong year. Some investors would be happy with 10.39% for a full year. So to get 10.39% in just 1 quarter is really impressive. I've also included this month the equal weight S&P 500 returns, which is at 7.78%. The difference between these two is that it gives each stock in the index an equal weight. Instead of the S&P 500, the SPY, which is up 10.39%, this gives a larger weight to the bigger companies. And since large cap tech has performed so well so far in 2024, you want to see what the performance is equal weighted, because I've calculated the average of my stocks on an equal weighted basis. I haven't given a greater weight to my larger cap investments. I've just taken the average on an equal weighted basis. So one of my viewers said looking at the equal weight index is a better comparison than looking at the S&P 500 index to compare my stock performance versus the larger broader market index. So I've included both so we can compare both, so you can see a more comprehensive comparison rather than just looking at one. All right, so here is the performance of my list of top 24 stocks to buy as of the end of March, as of March 31st. So far, year to date, my stock picks have delivered 10.37% return year to date, and you already saw the S&P 500 has delivered 10.39%. So if you compare my list of top 24 stocks to buy versus the S&P 500, you would have been relatively even, whether you bought my 24 stocks or whether you bought the S&P 500. So my performance has been relatively flat, equal to the S&P 500. If you look at overall, I've had 1, 2, 3, 4, 5, 6, 7 out of the 24 stocks that are down, and 17 out of the 24 that are up. So just looking at up versus down, 17 are up and 7 are down. So as a percentage basis, significantly higher percentage are up than down. However, if you compare my performance, the 10.37% versus the equal weight index of 7.78%, then I have outperformed that index by 33.34%. So on an equal weighted basis, which is what I've taken here, the average, right? I've just taken an average of the performance. I didn't give a greater weight to, for instance, Nvidia, which is one of the larger cap companies that I've picked, and it's the best performer at 82%. I haven't given that a greater weight than the rest of the picks. For instance, Fiverr, which is down over 20%, or Chewy, which is down over 30%, being a smaller cap tech stock. So the equal weight is a better comparison here. And looking at it that way, I've outperformed the equal weight index by 33.34% so far year to date. Now, I also usually say I don't expect these types of outperformances to continue for a very long period of time, because it's unrealistic to expect that kind of outperformance. If I was to be able to do that, I wouldn't be on YouTube. I would probably be a portfolio manager managing billions in assets. So don't expect this kind of outperformance to continue, but it's nice so far while it lasts. Now, let me give you that next stock, the new stock that I'm adding to my list of top stocks to buy. And that new stock is Micron Technology. Micron is trading at a forward price to earnings of 15.46, and the company is benefiting from the surge in demand for artificial intelligence. Edge devices are requiring an increase in what they need in terms of memory and storage for their AI devices. These include tablets, phones, and computers. And so Micron Technology, being in the business of storage and memory, is going to benefit from that trend. Furthermore, the replacement cycle for computers, phones, tablets, laptops, etc. is just underway. Those computers and phones that were purchased in 2020 and 2021 are going to need to be upgraded starting in 2024, late 2024, I would say early 2025, mid 2025 is going to be the peak of that replacement cycle. And Micron is in a prime position to benefit from that trend. I also like management's strategy of not increasing supply as much as demand is going to increase, to let some of that increased inventory catch up to demand. So I like where management is going. I like the cyclicality position with Micron Technology and the longer term benefit from AI, which is all of the reasons why I've included Micron Technology into my list of top stocks to buy for 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.